To achieve net zero, I guess the entire energy ecosystem will require a profound transition. And in looking actually at the metrics itself, the International Energy Agency has predicted something like $3 trillion needs to be invested between now to achieve net zero by 2050. Those are enormous numbers, particularly when you consider that electricity generation has only really had $500 billion invested in it to date. So, to put some metrics around this, the volumes need to treble between now and 2030, which is in 8 years' time, and then double after that through to 2050. So the challenges are very, very clear for all of us as groups and as an industry as well too, on how we can contribute towards these efforts. We believe, based on our research, that basically energy generation is the biggest source of CO2 emissions. And so we believe that emissions from electricity will fall the fastest in terms of declines in industry and transport. And we expect around 1.9 gigabytes in carbon emission reductions will be removed by 2050 via bioenergy projects, which have carbon capture and storage, as well as direct air capture, carbon capture storage solutions. So direct air is essentially, I think the way I tend to think of it is it's a bit like a HEPA filter, but on a much larger scale. So it's taking a lot of the air and cleaning it and essentially capturing the carbon. Sorry for simplifying it to those purists in the audience. And that carbon in turn can get repurposed for other activities such as carbon-cured cement, as an example. So what does this all mean for Asia Pacific and the infrastructure debt opportunity? Our team, essentially as global dollar investors, means that we aim for diversified portfolios across sectors and geographies, which reduces the political and economic shock risk that we're investing on behalf of our clients. So to date, we've been able to deliver approximately 113 basis points over a BBB corporate bond index in working with a whole variety of borrowers across a whole variety of sectors. We invest globally, as I flagged earlier, for a variety of Asian investors. And it's usually very common for these investors to start in a sector that favors their home country and their home region. And we are well placed to support them in doing so, and indeed have done so for a number of these clients. Asia for us is a tremendous opportunity set in terms of both demand and GDP growth. Certainly when you think about some of the metrics, at a regional perspective, I think the contribution towards energy sources is going to double from 9 to 25% in terms of a focus of renewables. So we are certainly in the middle of a transformative period for our industry. From a market diversification point of view, there's quite a broad plethora of markets that we do cover within our investment program that starts all the way from North Asia, extending all the way down to Australia.